Good morning, traders, or happy Friday, I should say. It is Friday, the 19th of May, 2017. Thanks for joining me for another Trader Bite, early nourishment for your trading mind. Uh, Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not necessarily indicative of future results. The overnight news this session here is not very heavy. Uh, not many pieces there. Excuse me. Yesterday, U.S. Treasury Secretary Steve Mnuchin said that the Trump administration no longer supports the separation of investment banks and commercial banks. This is a change from a campaign promise and is giving relief to the banking sector. That was big news yesterday. Also, in the UK, the Prime Minister Theresa May revealed the Conservative Party's manifesto on Friday, targeting stricter boardroom pay, creating mechanisms of controlling boardroom pay and better worker protection. Um, not that it affects us all that much. This morning at 4:12 a.m. Eastern Time, OPEC panel said to be considering scenario of deepening and extending oil supply cut agreement following meeting with non-members on Friday, May 19th. So this has caused oil to gap up above its 4 days of balance. Crude has put in just a beautiful technical balance in that auction. And this morning we are trading above it at 50.27. The market stance this morning is crude being the leader, up 1.25% currently. Crude went as high as $50.43 in the overnight session, followed by the euro, which is, believe it or not, is at $1.12 now. It's trading $1.12 even. Euro stocks come next. Risk is on this morning, but light. There aren't any real big moves except for crude. Um, Money's moving into indices in the overnight session. The dollar's a laggard today. The dollar's down 0.56%, followed by the Eurobond, the 10-year note, and the U.S. Treasury bond, which is almost a break even, up a tick or down a tick. So that's the stance of the market. Slightly risk on. We're inside of yesterday's value and balance. Not expecting too much today. Let's take a look at what's ahead. This morning at 10 a.m. Eastern, it's a half hour after the cash open, we get Eurozone consumer confidence advanced for May, looking for negative 3.0, negative 3.0. As far as speakers, we already had ECB speaker Prait, already had ECB speaker Constancio. At 9:15 Eastern in 10 minutes, we get Fed speaker Bullard with comments on the economy. And then at 1:40 p.m. today, we get Fed Speaker Williams in San Francisco. So that's what's ahead. Let's look at what was behind us, what we left behind here yesterday, and what was expected versus what actually happened. Here we go. There's your primary hypothesis yesterday. The primary idea, because we were looking for the market to continue the impulsive move down, we were looking for it to extend its motion down, a slight responsive trade on the open, but looking for the major move to be to the downside, to the overnight low, and then bounce back up and close somewhere near the selling day's low, Wednesday's low. That didn't quite happen. The secondary hypothesis was spot on though. Initial move down initiative, and then we get a responsive move back into the range, a bounce off of the low or around the low of the prior day, and then continuation. And I was looking for the 2372 as the target of the point of control, with some fair resistance at 69 being the initial resistance. That's what that white line is for. But the main target yesterday was for 72 and a quarter. That's basically what happened on the open. Here we go. We get a push down. We get a pretty decent opening swing. Let me move that over. We got a pretty decent opening swing, push down, and then the market moves back up into the range, tests below, keeps extending higher, tests below again, and then we get the impulsive move up here, just like I drew in the hypothesis. This is the key move up, and then we start to continue to move higher. The first resistance, as mentioned yesterday, is likely to be that 6650 area, the LVN. We push to 6750, pull back, and then drop all the way through the mid. This looked like it was done, and it was likely to just continue to trade sideways for the rest of the session between 66 and 54, which is a pretty decent amount of range relative to what we've had recently. And then later in the session, we get the consolidation, the consolidation here, and then we finally break higher and get the main target. Ultimately, the market closed right on top of its point of control. The profile is fairly even, is fairly balanced, very orderly auction yesterday. Good discovery on both ends. And then this morning, we are trading right here at 23.69 and a quarter, right inside of balance and just above yesterday's close, giving us that positive skew on the indices overall. But we're still in value, and we're trading inside of yesterday's range in the overnight session. The market did a pretty good job discovering to the downside on the overnight, hitting 23.61 on the low side, 23.71.50 on the high side, and is trading right in the middle of it. Note the cross on the close of this the small lots versus the small delta versus the large delta. This is what I talked about, I believe, yesterday. There's a tendency for these to cross at the end of the day. I'm still kind of collecting data on that. But overall, yesterday we did continue the move down. We did get our small continuation, and now we're in a consolidation. There's still a chance that we would get a push over the next few days to 47.50 before we rest up and then start to rotate back up. If we're going to rotate back up, we have a lot in this area. We've closed the gap zone below. We've tested the gap zone of 425, which both of these are going to be eliminated today, and we've formed a new gap zone up higher, a new gap zone up higher, and that's an area that remains unauctioned recently as well. A lot of levels in this area, so there's a lot of noise on the chart as we've seen. We haven't had the volatility. We generally don't move away from areas swiftly, so we end up having to consolidate for a while, and these levels get compressed together. Here's the overnight session. The overnight session gives us a double distribution on the open. We test lower, we come back into the balance that we had, then we break higher right after the European Open, and then we consolidate up here. We have a double distribution overnight profile, Globex profile, and the mid of the session is in line with the LVN. And this gives us an important area to watch out for. Again, that area is 23.66 and a quarter. So remember yesterday, 23.65. We tested that on Wednesday on the close. We tested it yesterday, and today it happens to be the low volume node of the session. So I'm watching to see how that's treated on the open. I'm expecting that the move on the open is likely to be responsive down into that 23.66. If it holds, this provides me with an early area to look for a long for a 3.5 point target. And then if it fails, then we know that it's likely to come into balance and fall back into yesterday's point of control down here at 23.63 375. Okay, so that's what we have in the overnight session. While I have you, let's review again what the week has done. This is the weekly market profile. Each one of these represents 1 week of trading. The blue is the volume profile, and the colored one is the market profile. The market profile is built on half-hour TPOs, or time price opportunities. They're represented here in terms of dots and actually letters. So each one of these letters represents a half-hour bracket, and what this is doing is it's creating a histogram by stacking these brackets together. What's interesting about this is if I split the profile, we can see in half-hour increments what each day has done. So here's Monday is gold, Tuesday's purple, Wednesday's red, Thursday's green. And what this does is it gives a very clear visual, given the colors, a very clear visual of the price action and what the market has done. So we could see here on Monday, perfect balance, complete balance. And then we have the gap zone right down here. Then we see Wednesday. Wednesday opens in the blue dot right. Oh, covered it up. Opens in the blue dot right there. If you're not watching in 1080p, switch to 1080p by selecting that so you could see the details. We open in the blue dot, we test up, and then it's all selling from there. And then yesterday, our blue dot's down here, and then we test down and we push up. So these 2 days are starting to balance each other. After today, we're likely to get a new microcomposite down here so we can see what the action or where the action is. So that's what the market has accomplished. It clearly broke down and away from where it was trading. And this is why I'm looking to press the shorts. Short term, I'm looking to press the shorts all the way up into the gap. Once we get into the gap, I'm not going to press the shorts, and I'm going to start pressing the longs for a push back up to 2400 or the balance zone here at 2399.50. That's the bigger picture, and that's what we've accomplished this week. So when we compress this back together, we can see what we have accomplished. We've moved away. The market has basically said, okay, these prices are overvalued, and is accepting these prices down here. That's what the auction has done. So we're in balance down here in the 2363 to 2365 area. Keep that in mind. What have we got for today? I want to remind everyone that it is Like Friday. Please, before you leave today, please hit the like button on YouTube. It does help me out when I need something from YouTube. So hit the like button today. I ask you to do this just once, 1 day a week. Today's the day. Today, I'm looking for an open auction. We are inside of value, inside of range, open auction, responsive. Looking for it to drop down into the 66, 65 area, potentially bounce around. I'm looking for it to continue to be responsive, and I'm looking for it to push all the way to the overnight low, and then to balance back into the middle. It is Friday. I'm expecting it to close in the 2366, 67 area. That is the primary hypothesis. So the primary hypothesis is responsive. Looking for the bigger moves to push down. Okay, that's how we're set up currently. I'm looking for it to come back into balance in a balanced profile. Since we did test the point of control and we have an excess high or a rejection up here, you can see it in the candlestick, an excess high, a taper in the profile. So we've tested back up to the point of control, to the balance point of the prior day, and have rotated back down. And so I expect that rotation to continue. Okay, that's the primary hypothesis. The secondary hypothesis is initial push down, and then I'm looking for a base at 2366. I'm looking for an impulse move higher, and then the pullback to the overnight point of control and push all the way up to 2375, which is a CLVN right here, and then pull back and then a continuation. I'm looking for the target to be the other key LVN right up here at 23.78. So I'm looking for the 78 to be the target for the day before the market balances and pulls back and then holds 23.72. So on hypo 2, I'm looking for it to close around the 23.72, 23.73 area, right? So this is how things are setting up, the key ideas. The tertiary or the third hypothesis is an impulse, is a push up that is opposed immediately. So I'm looking for an immediate push up, open test drive, uh, drive down, and then start to work itself back down into the prior day's low to extend down to 47. 47 becomes the target. That's hypo 3. On a Friday, the probabilities of that are probably pretty low, pretty low, and I'm not expecting that move to happen today. Also, I'm expecting that the usual to continue here, that on every dip we are likely to push and squeeze up rather than allow the continuation down. The sell-off has occurred in just one day. Wednesday, gap down and run. I'm not expecting this to continue lower without consolidating for a period of time. Yes, today is monthly expiration on options and options on futures on the S&P, but the effect of it is not expected to be huge. So that's all I had for you. Good luck today. Keep it tight. Make sure that you're not blowing away half your account on a day like today. Make sure you follow on Twitter, futures at FuturesTrader71. And if you have questions or any comments, just hit me up there. We do our best to respond. Take care.